Hello, my name is Andrew Thake, and I'm a divisional director with Resourcing Tomorrow. Delighted to be joined today by one of our speakers at the forthcoming Resourcing Tomorrow Hong Kong event on the 16th to 17th of April. He's Jason Chang. Just a bit of a background about Jason. He's the CEO and Managing Director of EMR Capital, who are a specialist resources private equity fund with over $5 billion in assets under management. He's also the chairman of the Australian Chamber of Commerce in Hong Kong. Delighted to have you with us today, Jason. I'm going to start off with quite a long opening question. The mining sector requires $6 trillion of investment by 2035, 4 times the market cap of the top 20 miners, with passive ETFs dominating the market, but often ignoring junior explorers. Do you see the private equity moving earlier into the Lassonde Curve to secure high quality assets before they become shovel ready?
Thanks, Andrew. Private equity has already been moving into the early stage assets as well as mature stage assets. But I absolutely agree that you're going to see a greater penetration across the entire mining supply curve and value curve by private equity. Private equity today is still a relatively small proportion of total private equity globally, primarily because mining and resources is such a specialized sector, but we're going to see the emergence of a greater volume of specialist mining private equity managers like EMR Capital. And in that regard, from an EMR Capital perspective, we are seeing right now good value across the entire value chain, including the earliest stage assets. One of the things that a lot of private equity firms do, of course, is they have the operational expertise to better assess the opportunity, the risks, and the return. And in our case, in the case of EMR Capital, we actually own and operate all the projects we own and buy. Therefore, we're able to get a better alpha across the assets that we invest in.
And you're speaking on a panel about why so many shovel-ready projects remain unfinanced. From your perspective at EMR, is a bottleneck a lack of available capital, or is it just that shovel-ready projects today lack the specialized technical and ESG credentials that modern investors such as yourselves now demand?
It's a combination of a few factors, Andrew, one of which the mining sector is often seen as a very capital-intensive sector, and there's still a lack of knowledge or specialized knowledge from the investor market. Therefore, a lot of the private capital players or investors are investing alongside managers such as EMR Capital, but there are not many specialized mining private equity managers. So you can call it a bottleneck of the sort of pipeline into projects. And secondly, the lack of the specialized technical expertise on the part of investors mean that quite often mining private equity is competing with all other sectors. Therefore, from time to time, we still see some projects remain unfinanced. But I think that situation is likely to change given there's a greater awareness today by global markets around the upside embedded in a lot of these mining projects. And as you said, the mining sector requires another $6 trillion. So I think you'll see commodity prices elevating over time, and that should draw a lot of interest from investors into many of these shovel-ready projects.
Mm-hmm. In your role as the chair of the Australian Chamber of Commerce in Hong Kong, how are you seeing the appetite of North Asian capital, specifically family offices and institutional investors, change towards Australian and indeed global resource projects, given the current geopolitical tensions?
No doubt there has been a dramatic increase in appetite for exposure to the resources sector. You've seen it in the IPO markets last year. Two of the largest IPOs globally were in the mining and critical mineral sector right here in Hong Kong. And Hong Kong has regained its #1 spot in the world as the largest IPO market. I think this year you're going to see very much the same trend. There's a pipeline of over 200 companies looking to list on a Hong Kong exchange, and many of them are, in fact, in the resources and critical minerals sector. So there is significant appetite from North Asia to get more exposure into this sector. And Australia is seen as a wonderful jurisdiction for investment. So I think the global volatility in geopolitics is actually going to divert some of the capital away from other countries to a country like Australia.
Mhm. Does the EMR Capital now look for junior partners who already have downstream relationships, like offtake with battery makers as one example, as a prerequisite for investments rather than just geological potential?
That is indeed quite an important factor in our assessment of investing into the battery minerals sector. We are looking actively for assets in the battery and electrification dimension. And the downstream, as we know, is a very critical element in terms of the whole value chain, and the ability to monetize the offtake at a reasonable price is key. So any junior mining company with an existing downstream relationship makes it more interesting.
A theme for Resourcing Tomorrow Hong Kong is the physical resource demand of the AI revolution, the rare earths and copper needed for 50 million projected robots. As a private equity leader, are you adjusting EMR's portfolio to prioritize these tech-enabling minerals over traditional base metals that you might have invested in the past?
Even before the AI revolution, Andrew, I think we have seen an increasing demand in metals such as copper, which we can see a significant deficit over the coming decades. The AI revolution simply turbocharges the attractiveness of entering into something like copper. So indeed, we have been long-term investors in copper. We are looking actively into some of the other battery minerals, such as rare earth and lithium, and we're continuing to look at that. There are quite niche sectors. Certainly, there are some projects that will definitely be very financially attractive, but we want to be quite careful given that they are smaller markets and they're quite niche. And of course, they're subject to greater regulation by governments around the world.
There's significant debate on how to engage with Chinese corporate leaders regarding their processing dominance. For a fund manager like EMR, how do you navigate the challenge of utilizing Chinese technical expertise in processing whilst maintaining the ESG and security of supply standards required by many Western LPs?
China is absolutely at the forefront of technology in mining across every dimension of mining, processing, supply chains. So it is very challenging not to be engaged with China tech in mining. And at IMARC this year, last year in Sydney, we had some of the most advanced Chinese companies in this sector. It was wonderful to hear from them, and they're doing a lot of good work around the world. For EMR, we are fortunate because we are owners and operators of our portfolio companies. We are able to assist the portfolio company to procure the world's leading technology in ensuring our mining is the most efficient. And China certainly is right up there. And they have very high ESG standards, I'm glad to report, Andrew. So that's not always a concern. And I think overall, there's less sensitivity in terms of the processing versus the supply of raw materials from a geopolitical perspective. So you will see many global companies today have deep engagement with Chinese equipment manufacturers and mining tech companies. So EMR is very much looking at that and ensuring that we are world's best practice across our entire portfolio.
Just one last question, Jason. Many people who I talk to haven't been to Hong Kong since before COVID. How has Hong Kong changed as an investment destination? And what would you say to those people who haven't come to Hong Kong, say, since 2018 or 19? And why should they come to Resourcing Tomorrow Hong Kong in 2026?
Well, let me touch on the last question about resourcing Hong Kong. I mean, the world's largest demand for critical minerals and resources is this time zone, and Hong Kong is right at the center of it. One of the reasons why EMR Capital relocated our headquarters to Hong Kong is to be closer to North Asia. That's Korea, Japan, Taiwan, Indochina, China, and very good access to Southeast Asia. All of these countries are minerals rich. And I think Resourcing Tomorrow is super exciting because Resourcing Tomorrow will be bringing projects, government, key stakeholders from the region. So I think possibly for the first time, you're going to get a great, hopefully, meeting of the most important players in this sector. So from that perspective, Hong Kong capital markets, private markets is going to flourish in terms of resources. Hong Kong is in fact in the center, literally, of, I would say, the planet, because it's easy to get to US, Europe, Southeast Asia, and even Australia. So that's one of the reasons I think it's a great place to locate a regional headquarters.
And having myself lived in Hong Kong from 2014 to 2016, I can definitely echo that sentiment. We're super excited at Resourcing Tomorrow to be coming to Hong Kong on the 16th to 17th of April. We're delighted to be working with yourself, EMR Capital, and the Australian Chamber of Commerce. Thank you very much for your time today, Jason Chang. Thank you very much.
Thanks, Andrew. Thank you.